Well, another Berkshire meeting has come and gone, and as I'm sure you guys have seen, this was a really big one. After 60 years of doing this meeting as Berkshire CEO, Warren Buffett effectively announced that he will be retiring. Officially, he said he would recommend the board of directors vote Greg Abel in as CEO, so at this point in time, there's still a whole bunch of stuff that does need to be ironed out, but overall, it's pretty crazy news, and you guys aren't going to believe this. This guy, I missed it. I missed the news. I was watching the meeting with Richard from the Plain Bagel, and he wanted to go down to the conference floor to get some peanut brittle. So the meeting was scheduled to close at 1. We left at 12:55 to go down and beat the crowds. So we left 2 minutes before Buffett's announcement. Yeah. Your fault. Your fault we missed that, mate.
We haven't tried it yet. It might be worth it.
Might be worth it. I don't know, man.
We'll find out. Sorry, Brandon.
So an unfortunate situation, but indeed some pretty crazy news. As I said before, we still need a lot more information. Everybody was blindsided, including Greg. Greg didn't even know that this was happening. So far, all we know is that Buffett has recommended the board of directors vote for Greg Abel to be the CEO at year end. But some of the stuff we still don't know is whether Buffett is going to still run the Berkshire portfolio, how much sway or influence he's going to have, how much he wants to still be involved with the company. Sounds like he's still going to be around a fair bit, but we just don't know. It's probably easier if I just play the clip.
The time has arrived where Greg should become the chief executive officer of the company at year end. I would still hang around and could conceivably be useful in a few cases, but the final word would be what Greg said in operations, in capital deployment, whatever it might be. And Greg doesn't know anything about this until what he's hearing right now.
And I don't think it was caught on camera, but apparently Greg's face was just one of absolute shock. It was interesting, in a vote of confidence for Greg, Warren Buffett did say that he's not going to be selling a single share of Berkshire Hathaway stock, which, is really nice. He said that overall he believes in Greg's leadership, so of course he wants to hold on to his stock. Definitely nice to see that vote of confidence for Greg, but on the flip side, I do see the other side of it. If Buffett did not say that, then you can only imagine what the effect would have been on Berkshire stock. And speaking of Berkshire stock, well, I don't actually know how it's affected Berkshire stock at the time of recording. So Stephen, I will please ask you to put up whatever happened to Berkshire stock on Monday or Tuesday up on screen right now. Wow, shock, amazing, right? I have no idea. But while that was definitely the single biggest piece of news to come out of the meeting, it wasn't at all the only thing that Buffett talked about. In fact, one of the big things that he spoke about was the current stock market correction that we've seen over the past couple of months. And this is really interesting because this is the first time we've seen Buffett talk about the stock market correction full stop. He hasn't given any form of commentary on the situation since it's happened. So overall, what does Warren Buffett think about the stock market correction? Does he think it's just getting started? Is it overblown? I'll play the clip.
What has happened in the last 45 days, 100 days, whatever you want to pick up, whatever this period has been, it's really nothing. There's been 3 times since we acquired Berkshire, that Berkshire has gone down 50% in a fairly short period of time, 3 different times. Nothing was fundamentally wrong with the company at any time, but this is not a huge move. The Dow Jones average hit 381 in September of 1929. It got down to 42. So that's by going from 100 to 11. This has not been a dramatic bear market or anything of the sort.
So despite the S&P 500 falling peak to trough 18% this year, Buffett is really not reading too much into it. And what he said is actually backed up by the data, because at the start of the day, before the meeting even began, Berkshire released their Q1 report. Now, we know coming into the start of 2025, Berkshire had a record cash pile around $334 billion. Now, many were expecting that number to fall across Q1 as Buffett maybe took advantage of the depressed stock conditions. The truth, however, was that Berkshire's cash pile actually grew further, and it now sits at, drumroll please, $347 billion. $350 billion just sitting in cash. So Buffett clearly not finding much to sink his teeth into across that stock market correction. But interestingly, he did mention that he almost spent $10 billion on some deal, but when he was questioned later, he just refused to elaborate. But overall, yes, Berkshire's cash position is now $42.2 billion, and they have $305.5 billion in short-term treasuries. Buffett did not bite, and he had select words for those that did get swept up in the stock market mania over the last couple of months.
If it makes a difference to you whether your stocks are down 15% or not, you need to get a somewhat different investment philosophy, because the world is not going to adapt to you. You're going to have to adapt to the world, and you will see a period certainly in the next 20 years, you'll see a period that will be in what somebody in the market described one time as a hair curler compared to anything you've seen before. I mean, it just happens periodically. The world makes big mistakes, and surprises happen in dramatic ways. And the more sophisticated the system gets, the more the surprises can be out of right field. That's part of the stock market. And that's what makes it a good place to focus your efforts if you've got the proper temperament for it, and a terrible place to get involved if you get frightened by markets that decline and get excited when stock markets go up. I don't mean to sound particularly critical. I mean, I know people have emotions, but you got to check them at the door when you invest.
And to take things one step further, Buffett did actually go on to talk about what's caused all of this stock market volatility, that being Trump's tariffs. And I think this is one of the most interesting comments to come out of the whole Berkshire Hathaway meeting this time around. As we know, Donald Trump's trade policies have really put a spanner in the global economy, and it's really impacted the share prices of some of the world's biggest businesses as well. We've seen the big tech names lose 10, 20, 30% over the last few months. And finally, we got to hear Warren Buffett expand on the issue. So what does he think?
Trade can be an act of war, and I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. I don't think it. That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. We want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So trade should not be a weapon. And the United States, we've won. I mean, we have become an incredibly important country, starting from nothing. 250 years ago, there's nothing been anything like it. And it's a big mistake, in my view, when you have 7.5 billion people that don't like you very well, and you got 300 million that are crowing in some way about how well they've done. And I don't think it's right, and I don't think it's wise.
So Buffett not really mincing his words on that one. And as we've seen, Trump's trade policies have not just targeted adversaries, they've targeted allies too. And all that does is it just pushes trade partners away. Now, as I've explained previously, this may have some positive effect because it does provide this stimulus for companies to bring manufacturing back into America. But really what we've seen so far is Donald Trump just using tariffs as a weapon, effectively strong-arming other nations with just the size of the US economy. So it's very interesting to see Warren Buffett call this out. He's much more of a globalist in this sense, thinking that we should encourage trade and eliminate as many trade barriers as possible when there's an obvious mutual benefit to the situation.
The more prosperous the rest of the world becomes, it won't be at our expense. The more prosperous we'll become, and the safer we'll feel, and your children will feel someday. So that's. But don't expect my import certificate idea to go down there with Adam Smith's Wealth of Nations or anything.
So they are Buffett's thoughts on the trade situation. And if you've been following my content over the past couple of months or so, you'll know that that's pretty much my opinion as well. It's kind of like going to a potluck dinner. Everyone brings the dish they make best. You know, someone will bring pasta, another one will bring a top tier curry, someone else will bring a perfect pie. Together, everyone eats better than if they just tried to make everything themselves. Now that's free trade. Countries specialize, they trade, and all benefit from more variety, higher quality, and lower costs. Now tariffs are kind of like making everyone pay to go to the dinner. You know, naturally, when you pay, people start bringing less to the table. You know, some people are likely to stop showing up, and suddenly you're stuck with only your own cooking, which might not be great, and you're paying for the privilege of eating it. That's effectively a trade war. Less choice, higher costs, and everyone's a little bit worse off. So it was really interesting hearing Warren Buffett talk about that, give his opinions. And from there, the last thing that I really wanted to cover in this video, which has been a very, very hot topic in the finance community, is the US debt situation. Now, we all know the story. The US is about $36 trillion in debt. The deficit keeps expanding, which snowballs the debt pile. And now, higher interest rates are making the government's annual interest expense just grow and grow. But what does Warren Buffett think about it?
We're operating at a fiscal deficit now that is unsustainable. But you know that if something can't go on forever, it will end, to quote Herbert Stein, a famous economist. And we are doing something that is unsustainable. And it has the aspect to it that it gets uncontrollable to a certain point. I mean, essentially you just give up on it. We've come close multiple times, and we've still had very substantial inflation in the United States, but it's never been runaway yet. And that's not something you want to try and experiment with because it feeds on itself. So I wouldn't want the job of trying to correct what's going on in revenue and expenditures of the United States with roughly a 7% gap, when probably a 3% gap is sustainable. And then the further away you get from that, the more you get to where the uncontrollable begins.
So again, Buffett not really mincing his words there, and fair enough. When debts are rolled over these days, they're being refinanced at much more punishing rates to 5 years ago. The average interest rate on government debt is now above 3, about double what it was back then. And the result is, well, this chart here, where interest payments are now the biggest expense of the US government outside of Social Security. That's crazy. It's a very sticky situation, and it's the problem that Elon Musk and his team at DOGE are working really hard to try and solve. And reason I bring that up, Warren Buffett was also asked about DOGE during the meeting.
Do you think the net benefit of DOGE will be positive or negative for the long-term health of the United States?
Well, why don't you give me a hard one? I think that bureaucracy is something that is amazingly prevalent and contagious even in our capitalist system, and that big corporations, overwhelmingly, most of them look like they could be run better. I'm sure Berkshire does in many respects. You know, and government is the ultimate, so it really doesn't have any checks on it, and that's why it scares you to some extent about what the future of the currency will be, because they can print currency. In theory, you would make it so there was substantial downside for anybody that screwed things up, but there isn't downside, there's upside. So I think the problem of how you control revenue and expenses in government is the one that is never fully solved, and it really hurt dramatically many civilizations, and I don't think we're immune from it, and we've come close to it. But if you tell me how in a democracy you go in and really change things, it's a job I don't want, but it's a job I think should be done, and Congress does not seem good at doing it.
So despite a little bit of history between Elon and Warren, it seems like Buffett is actually quite on board for DOGE. He does think that somebody needs to go through the spending of the US government and try and trim the fat. Now, DOGE are reportedly up to $165 billion in total savings now, so there is definitely some way to go. And there are many people that are even skeptical whether they can go much further. But overall, Buffett, like many others, thinks it's still something worth pursuing. And with that said, they were really the big topics covered, or the big news topics to come out of the Berkshire meeting in 2025. So thanks very much for watching the video. I hope you guys got something out of it. One thing I do want to say, big thank you to everybody that came up and said hello at some point during the weekend. It's a really, really cool time where we just get all of us in the same place. So if you've never been to a Berkshire Hathaway shareholder meeting, I definitely encourage you to go to one. I'm sure they're still going to keep running it, even if Warren Buffett's technically stepping down. So if you can get there next year, definitely come along. It's a great way to meet people like, Guy Spear or Monish Prabrai. I'm hearing that Phil Town might be going as well next year. I'll be there. Hamish will be there. I've been hanging out. Nate O'Brien's just outside. I was hanging out with Richard Coffin from the Plain Bagel. Just everyone's in the same spot, and it's a really good vibe. So I definitely encourage you guys to come along if you've never been before. But with that said, I'm going to sign off. Last thing, if you do want to go that extra step and financially support the channel and help our efforts here on YouTube, we do have a full 7-hour in-depth course that's called Introduction to Stock Analysis. That goes through step-by-step the Warren Buffett strategy, and it tells you exactly what you need to do for each step of the process. Plus examples, we go through 3 valuation methods, we teach you how to read financial statements, all the stuff that Warren Buffett would do in his stock selection process, we teach so that you can then go and apply it yourself. So if that's something you'd be interested in and you want to help the channel as well, we'd really appreciate you checking it out. We spent a very, very long time on those courses. They're absolutely top notch. The course goes for 7 hours. It took us 9 months to make. So I'd really appreciate it if you checked it out. But apart from that, I'm going to sign off. Please leave a like on the video if you did enjoy it. But with that said, I'm going to head home. I'll see you back in Australia.